Hello and welcome to the special interview. We have with us today Mr. Ashu Khullar, India head of Citi Bank, and he is soon bound to London to take over as co-head Global Assets Management. Joining me today in this interview is Network 18's Group Consulting Editor, Mr. Bodhisattva Ganguly. And thank you so much, Ashu, for joining us for the interview. Tell us a little more about that, and do you see reasons in your new role to stay connected with the Indian market as well?
Yeah, no, first, thank you for your wishes, Hamsini, and welcome, Bodhi and you. So yes, I think my new role really, I would co-head our global asset managers, which really is our coverage for financial sponsors, infrastructure funds, family offices. So it's really the broad category of alternate asset managers, and I'll be based in London. But I think what I'm really excited about is it keeps me in touch with India, because I'll be focusing more on EMEA and Asia, and my partner is based in New York, will focus more on the US. You know, India has become one of the most vibrant financial sponsor, sovereign wealth fund markets globally. And I think just, if you see in the last 2 weeks, we've had 4 major global firms who have celebrated anniversaries. They've had their global CEOs and chairmen. And I think it's been one of the best returning markets for, you know, some of the large PE firms. And I think it's, there's some very strong local players. So I think it's a really, really well-developed ecosystem. I think also given India's need for capital, their track record now of improving operational performance, just not money, but it's about actually helping companies grow and improve efficiencies. All the investment India needs on the infrastructure side, for which you need, you know, obviously more long-term capital. So I think it's great. So I think, and also the other thing which I'll say is, India is one of the few markets right now which offers multiple exit routes to the sponsors. So it's not really a pure IPO exit, which by the way, the local liquidity is so strong, it gives it's one of the most active IPO markets which are there. Otherwise, you have alternate routes. So I think that multi-exit option is really powerful, apart from the growth and value creation which they've seen.
Lovely. You came into India in 2019 to take over the operations here. 6 years from then, how would you summarize your stint here in India and your best moments here in the country?
Yeah, first I'll say is, listen, I think it's a real privilege to have had an opportunity to serve and lead this franchise. You know, I started my career in Citibank India, so I think it's certainly one of the, it's really a crown in the, you know, it's really a jewel in the crown within the Citi network. It always has been. And I think 6 years has been interesting, right? Because I think it's also coincided with a period for India to have really, I think, become a major player at the global stage, for us to get escape velocity around our growth. I think India has steered the whole macro journey better than most countries, I would say. And I think the whole young population, the digital dividend, the startup ecosystem, I think there is just that vibrancy in the country, which probably we haven't had on a sustainable basis in the past. So I think it was a great time to be in India from that perspective. Of course, we went through, you know, COVID, which was a big thing for all over the world, but India also had particularly a hard time. But I think going through with the colleagues in a manner where, you know, because apart from the bank, we have 30,000 employees who serve global operations. So I think for the entire team to come together in a manner where there was complete resilience of operations to go from day one office to suddenly home as your new office. So I think very proud of how my colleagues and the teams dealt with that whole COVID situation and continue to serve our clients well. But otherwise, I'd say, you know, we've kept the growth momentum on the franchise, and not only in 1 or 2 businesses, but it's been which is what we pride ourselves with. You know, we believe we have the broadest, deepest institutional and corporate and investment banking platform. And I think we've had all our engines fire up well. So if you see investment banking, we continue to dominate that space. Our transaction services and custody business continues to be areas of real leadership. Our markets business is now the largest markets business within Asia. So I think it's been a and then our commercial banking business, which is where we incubate the emerging and mid-sized companies, apart from the large corporates which we cover. So I think that's what makes me proud, is I think we've sustained growth, but on a balanced basis. And lastly, I think what I'll say is, We went through a big strategic change, which was a global change about exiting our consumer businesses in most markets except the US and a couple of other money centers. And I think that was, I must say, emotionally a difficult one for us to go through. We had 3,500 employees, we had 3 million customers. And I think what I feel good about, I think the team could really make sure that we gave a right home to our colleagues, 3,600 colleagues who had at least as good an offer from Axis Bank. We had minimal client disruption for what was a pretty complicated process. And I must say RBI was very helpful to us in going through. There was no precedence of a transaction of this size and scale.
Yes.
And lastly, I'll say we preserved value. From the time we announced to time we closed, I think we could preserve value of the business. So I feel probably, and then just, ability to serve our clients and, the team. It's always about...
And you also returned the best valuation for the business
I think,
within the group. It was the best exit that they got in India.
Yeah, I mean, India business was really a strong business, and Indian markets value businesses pretty well, as you know, but no. So yeah, it's been, I must say, professionally, it's been an incredible growth experience for me. I'm really, really happy I got this exposure and ability to come back and spend so much time here.
Now, I just wanted to just come back on your global role just for a moment, where you mentioned India about a place where investors are exiting at and they're making a lot of profit. And I think some of the private equity investors have also talked about India being a hugely profitable market. Can you put this in a bit of a global context, given that very recently China has also revived post, in a general sense, post DeepSeek. If you go back to the narrative of China 4-5 months back, it was all doom and gloom, right? I mean, China was still getting out of the post-COVID this thing in India. Now there's been a bit of a revival in terms of the Chinese market. Of course, political problems also there. Can you put this in a global context as far as the Indian markets are concerned? And another sort of kind of related question, as far as the investment banking is concerned, India has always been a small market in terms of fees. Is that changing? Do you see that changing going forward?
Yeah, so let me answer your second question first, Bodhi. So I think that is changing, and I think the reason it will change is because I think you're going to have larger transactions, you're going to have more cross-border transactions, whether it's foreign investors coming in or potentially sometimes to eliminate value, given the valuations in India, is to do some exits.
Yeah, the Hyundai type transactions.
Hyundai kind of transactions. And there are going to be more to eliminate value. I think you'll also see Indian corporates again look at offshore acquisitions. I think we've already seen a few cases with Bharti and BT. I think you'll see a lot more, because I think Indian companies now have an ability to finance and play selectively with some of the global opportunities. And then the capital markets have really been developing in a manner which gives you ability to do multiple billion-dollar IPOs. Very few other global markets have that size and scale. Now, US and some of the other markets still would dwarf us from an investment banking wallet perspective, but I do feel we are at the pivot point, and last year was a good one for the industry, so I do hope that I think that trend continues.
Which sectors do you see Indian companies make acquisitions abroad? And are we talking about the US, given the emphasis of the US government on reshoring in the US, especially post President Trump?
Yeah, I think we'll have to see how it plays out. Obviously, Europe, while there's been a lot of pessimism about Europe, but there's also very good valuations in Europe. So you could see now with a bit of Europe trying to get its act together and what we saw out of Germany. So it is possible that you'll see a la Bharti BT, could you have more transactions with some other large players? I think I could absolutely conceive people playing in sectors where they think they could have synergies of their existing businesses, or they may have brands or other processes which could be additive to their India businesses. So I think we can absolutely see that. It doesn't have to be specific sector. I think it could be a broad-based play. I think in terms of the context of growth, which you talked about earlier, I think the reality is, from a secular perspective, I do still believe that I think India has the kind of positives going for it, which is very unique set of circumstances globally. I do not think any major large economy has a combination of young population, which is a big growth driver, a macro which the government, to give credit to them, have managed through, COVID and beyond, with a lot of stability. And there is a lot of uncertainty in the world right now, but I would say India is probably one of the best places to be in. And I think we hear it from our clients. I mean, if you look at, if our clients, you ask them which are the top 3 places they want to invest in, it's the US and it's India. And now, from that strategic desire to actually putting investments on the ground, there's always a journey. People have to move supply chains, and geopolitics, again, I think right now India is in a reasonable spot. I think, again, the government has done a fantastic job in building the kind of relationships and managing that balance in a very positive way. So I think it looks, India certainly, I would say, is probably one of the better places to be in the world right now, despite the trade and geopolitical uncertainties.
So you referred to Citibank as a Citi. The Indian unit is a jewel in Citi's crown worldwide. The sale of the credit card business may have, although you gave detailed explanations as to why you were doing that, but it did send out some kind of a signal, at least, that Citi may not be that keen on India. And now, do you think that issue is now behind you, and you've been able to convince the market that you're here to stay?
I do think, Bodhi, and I think initially, obviously, people react to a headline,
yeah.
And I think we were always very clear that this
and and I think for a lot of people, the Citibank was their first credit card, so there is that emotional connect is there.
Absolutely. I recognize it, and frankly, we were very proud of what our consumers.
You may have bumped into people also.
Absolutely. I still get a few people. I still get a few people who express emotions around it. I get it. And I think we had built an incredible business, so I think no question about it. It's just that I think we said we have taken a global, under Jane, taken a global strategic decision that we will focus on areas where we believe we add the most sustainable, we bring our competitive advantage to our clients' benefit. And I think we believe that's cross-border global clients who need global banking. And I think in India, despite the sale of a consumer business, for the year ended March 24, we were still the largest foreign bank by revenues. Yeah. So I think as hopefully our clients and our communities and our regulators and the government has seen that Citi continues to remain very active, whether if you see it on some of the largest M&A transactions, the Disney Reliance transaction, the sale of American Towers, whether you see on some of the largest IPOs, the Hyundai, which was obviously the largest IPO ever, Swiggy, Hexaware, we did $1 billion IPO in a fairly volatile market conditions. The innovation we continue to do in some of our services business, in some of the payments platforms, using the digital infrastructure which the government has created, faster payments, the B2C payments, collaboration with some of the fintechs again in that space, the custody business, which we have a 36% market share in all FPI assets. Our FX business is the largest, we are the largest corporate FX player in the market. So I think on multiple fronts, I think hopefully we have proven to our clients that we are investing, we are with them, and we're trying to give them the best of Citi.
Actually, your CAGR has grown about 15% in the last give or take 3-4 years, and in some way that does corroborate to the fact that minus retail, the business has only gotten stronger for you in the country. And what has also happened over the period of maybe in the last 6-7 years is that the increase of credit substitutes has also there's been a better need for credit substitutes rather than direct credit. That's been an important business for you as well. Outbound Forex has done very well for Citi. What are the greener pastures that you're seeing right now as you leave behind the Indian franchisee for Mr. Bala to come through?
So I think, obviously, as globally, I think India has seen a lot of change as well, and a lot of it was initially on the retail space with digital lending and digital infrastructure and payments and everything else. But I think the need for capital in a country like India is so huge that I do not believe the conventional mechanics of delivery of credit or all the banking needs just from the banking system is going to be enough, right? We don't have enough banks, we don't have enough capital. So what you do need is you need more institutional investors to come in. And I think what we've seen on some of the REIT and the InvIT transactions is a great start. We need a lot more of that, because if we have to meet the funding of the kind of infrastructure needs India has, you need more capital markets, you need better risk allocation between institutional and bank investors. We need, and we've talked about this for a very long time, but finally we do need maturity of the rupee bond markets. I do think relative to equity markets, which are very sophisticated in India, the rupee corporate debt market needs to have a better maturity to be able to fund companies across non-investment to investment grade. So a lot more, I think, needs to get there.
So what is happening? Is there progress on that front? Because that's been talked about forever.
Yeah.
I think slow progress. I think there's more to be done, in my view, on that space. I think securitizations. Now you've seen, as the pressure on the bank balance sheets have come on, some of the private banks have started looking at securitizations as an option, right? So which is obviously a big area of focus for us. So for us, I think in terms of green shoots, we see progress, because I think at some level, Citi's strengths are aligned with what India needs, whether it's flow of foreign capital, digital delivery, ability to get foreign investment money into the country, taking Indian clients out. So I think on multiple levels, where we are investing in, obviously, is I think we're trying to do more around a securitization business. That's an area of development. Commercial real estate, so trying to create more institutional lending. I think we look and seeing if we can play a better role on the private credit side. And then, focus around capital markets will carry on.
Including private credits, because...
Yeah, I think that's a market we have to see how we intermediate. I think there are more players coming. I think there's an opportunity there, right? And for us to play a role in intermediating those flows.
That's interesting. That's interesting. And you've also developed a very robust startup stroke fintech space within Citi. How do you see that transition? As some of your own clients there might be looking at IPO and giving various other exit options to their investors.
Yeah. So obviously, that I would say the whole startup ecosystem, and India now has the third largest number of unicorns globally after the US and China. And I think the just vibrancy of the startup systems, the quality of the business models, the funding, the maturity, etc., is great. So I think obviously we see them as very important investment banking clients who we can do IPOs for private placements, potential M&A. But also, see, what we have strategically done is started banking these companies within our commercial banking when they're up and coming, because a lot of them are now born global. So when they launch in India, sometimes they're launching in the Middle East, they're launching in Singapore, they're launching in Europe. So I think the globality of a platform is very powerful to them. Their ability to give them digital solutions is very powerful to them. And so I think
So born global is an interesting term. It's like born global is an interesting term. It's like born EVs.
Yeah, which is a tagline, no?
Which is a tagline.
Yeah. Okay, we're not advertising anybody here, but yes.
And you've also had a very robust, I think for the last 5 years, consistently, you've come out on top as in the investment banking business among the global banks in India. Do you see this further shape up as a very important segment for your Indian business? And how big do you see it in terms of revenue scale up for you guys?
Yeah, so I think, listen, I'm really proud of our investment banking team in terms of what they have delivered. And I think, one, that business has been a consistent top two house over the last couple of decades or more. Okay, so, and then I think we've got a super charged up, experienced team, which is really intense. And I think the other thing which we package well, I believe, is bringing the holistic one Citi approach to our clients. So it's not only that we're pitching for one deal. Of course, you got to be the best in executing an IPO or an M&A mandate for a client, but to get them the best of Citi within India and globally. And I think as you get more cross-border in the way the market evolves, I think that plays naturally to our strength, as the most global bank. One, I think as Bodhi mentioned, I think the investment bank wallet will grow, I think the strategic value of that business is, I think, a lot more than just the fees you get onto that. Because it gives you access to the C-suite and it gets you into real decision making at the board and the CEO level. So I think even if that business is a high single digit business in our overall global revenues, I think we've got to weight it for the strategic value which comes with that business.
If I can just jump in on a sort of a slightly big picture question on foreign banks in India. If you look at the larger foreign banks in India, and please feel free to disagree if you don't, that they've been shifting from some of them perhaps 10, 12 years back may have wanted or aspired to get into some kind of a mass banking, right, using the term loosely. But those initiatives have largely been scaled back. Now what they're doing is a B2B business, which are very large businesses, the custodian business and things like that, and corporate clients, and catering to the wealthy and particularly NRIs. Would this be a fair summary of where Citi also stands? And is this the way, I mean, would you agree with this assessment?
Broadly, I think that's right. No, because I think my view is every company and banks in this and foreign banks in this, they've got to play to their strengths, right? I don't think foreign banks are going to try to outcompete an SBI or some of the private banks, right? So you've got to play to your strengths. And I think for most, and I'll speak for Citi really, I don't want to talk for competition, because some of them I know are trying to focus on wealth management and retail and everything else, is we took a decision to say we will play to our strengths. We will play, and our strengths are the globality of our business. We think we are the best positioned to meet cross-border needs of our clients inside out and outside in. And I think we believe we have a very powerful, the broadest, deepest institutional services and product platform. Investment banking, transaction services, custody, corporate banking, trade finance, markets, the whole platform. And that is a very powerful combination which we think we bring to our clients. That's what we'll compete on. And, ultimately, I think probably those are the areas where foreign banks can make a bigger difference, in my view, and be more differentiated.
Would Citi be interested in any of the bank privatizations that are going on? IDBI Bank, Yes Bank. Yes Bank is not quite a privatization, but there's a large...
I don't think those are in line with our strategy. I think we're quite happy with our platform, and we think we can grow organically in a very powerful manner.
Yeah, I think your answer to the previous question kind of answered that.
I hope so.
Yeah.
I hope so.
Right,
and is that also not why we're not seeing too much of interest in foreign banks having subsidiaries in India? A notion that was floated around the time that you took charge in the country.
So I think apart from one and a very small other bank, as you know, most foreign banks in India operate as a branch of their parent. And I think there is, I agree with you, unless somebody has an ambition to be a deep retail bank with a lot of branch presence, I think currently the branch model actually, I believe, serves the customers better, especially global customers, because they get the benefit of the parent counterparty risk from a bank perspective. They get benefit of a global documentation. And frankly, from a regulatory perspective, we are treated exactly the same way as if we were a subsidiary, in terms of our PSL obligations, our large exposure framework and everything else. So I think at this stage, I would think, and again, we'll see how the market evolves, and of course, it's a decision for every bank to take, but I do believe at this stage, it's actually in the interests of clients in general for the banking, the branch mechanic to be the way foreign banks operate in the country, but we'll see how this goes.
You made a very interesting point on that, and that's also collaborating with how your margin profile has improved in the country. I think last year you closed in ballpark of 5%, and it's one of the higher margins among the foreign banks. So you clearly see this as a way forward. In terms of NIMs, I'm saying.
Yes. So again, see, obviously we want to lend, but to us, NIMs is one part of what we bring value to our customers, right? You want to try and obviously lend and have a lending relationship with the clients, but we also want to meet their other needs, whether it's for working capital, supplier chain financing, their corporate finance needs, their risk management. So, lending and NIMS is one part of it, but to me, it's about growing the wallet around it and what else we do to help our customers.
Let me just, if we can wrap up, just one thing. And we've often had a lot of conversation on this. The regulator, for some reason, has been quite cagey about it. Acquisition finance remains a no-go zone still in India, but it's a very popular product anywhere else in the world. If there is any change in the regulatory thinking on that front, how would Citibank in India look at it? Because you do support a lot of companies on this globally.
I think it's positive. See, acquisition finance is a very core requirement for clients, as they induct in M&A and growth activities. So I think having banks an ability to play, is I think just a natural evolution of the market. But obviously, I don't want to comment on, I'll let RBI decide the pace with which we can try and meet the needs, because a lot of times, our value would be in a cross-border basis and we can fund them globally on an acquisition. So I think it's okay. I think the only other thing I'll say is, I think for us, the talent story around India is fundamental. And that is around the GCCs, which we have. We have 5 GCCs with 30,000 plus people. And more than the number, which has grown, I think they're getting more and more high-end in terms of the work we do. So 2/3 of the tech work now globally is done out of India. So it's no longer just back office, middle office, it's increasingly tech, analytics. So I think very proud of India as a major talent source for Citi as well.
Lovely. Hope to see you again soon.
Yeah, thanks, Samsini. Thanks,
Thank
Bobby.
you. Thank you so
Appreciate
much.
it.